Okay, the market bucked the trend today, so positive day. What's driven the market today?
Mostly manufacturing stocks, Lerato. There's been quite a lot of uptick in various manufacturing companies. Dangote Cement and some other companies moved up. We have one bank moving up, but for the rest of the banking sector that gained in the earlier part of the year, it looks like there's still profit taking going on there.
All right, let's talk about what we're likely to see on the interbank market, Kubi. With the central bank raising interest rates, it's had an impact on the interbank lending rate, moving up to 8% from 5%. And there are concerns that this might lead to major cash withdrawals by energy companies like the NNPC. Has that had any bearing on liquidity?
Well, yes, we've seen liquidities ease out of the market slowly. Immediately after the MPC announcement, there wasn't much of a reaction from the market. The rate stayed soft for a while. There was a lot of liquidity in the system. But today we're seeing double digits. For the first time since the MPC announcement, we've seen double digits today. We've seen overnight rates as high as 10%. Now we're seeing some impact, and we expect rates will stay high for the next few days until more liquidity comes in.
Under these conditions, Kubi, is it likely to have any impact on incomes generated, or returns rather generated, in the fixed income market?
Yeah, we're already seeing an impact. Actually, the fixed income market, what has happened, the 20-year bond is no longer on issue. And unlike earlier in the year, we're seeing bond prices go up. Bond prices have crossed the 80 level, and yields are at about 12%. So yes, we're seeing an impact.
Let's talk about the Naira, which, although looking a little more stable in the region of 152 Naira to the dollar, it has depreciated somewhere in the region of 1.9% to the dollar in the last 2 quarters and in early 2011. Are you concerned about the currency?
Not at the moment, and I'll say why. What happened was that at the beginning of the year, we had a pretty sharp depreciation for the first auction, and that can be explained by the holiday season. There was a lull over the holiday season. There was no supply from the central bank for the 2 weeks of holiday. In January, we came back, and there was a little bit of pent-up demand. People were starting off the new year, and orders were quite heavy. So we did see a bit of a depreciation in very early January. But what has happened is that since then, the Naira has traded in very tight ranges with the CBN. We see maybe 4 kobo, 6 kobo devaluation to the dollar, and then we see a revaluation. In fact, for the last 2 weeks, we've had a revaluation 2 weeks in a row, and then this is the first week that we're seeing 2 mild devaluations in a week, which is today. We had a 6 kobo slide.
Now, we've just referred to the raising of the MPR rate by the CBN recently. You were talking to us about bond deals, and with concerns being raised about the extent to which the foreign exchange reserves have been depleted because of the central bank's intervention in defending the Naira going forward, and talk of there being the Naira being, left to the devices of a market through some sort of a derivatives exchange. What are we likely to see?
Okay, what has happened is that we've seen a little bit of panic, some mild panic towards the end of the year. There's been a little bit of panic with importers getting worried that, okay, reserves are going down, rates are moving against them. And we've seen the central bank in 2011. They promised in 2010 that they were going to take some actions to stabilize that, and they've done that in 2011. What has happened now is that a derivatives market has been introduced. There are about 4 products on offer that importers can take advantage of, and we're seeing interest already from the corporates. They're looking interested. It's something that they do in other countries, and I'm sure they're very excited to see it happening in Nigeria as well.
Okay,
so that has had a calming effect on rates. Okay,
talk to us about the machinations of this derivatives market. How does it work effectively, and how does it help the rating of the Naira by way of what the market determines, as opposed to what the CBN can do to protect it?
Well, what it has done is that it reduces panic. One of the things that has affected the Naira over the past few years is panic. People thinking that, can the CBN meet demand? Or will rates be significantly different by the time I'm ready to pay for my orders? But by putting forwards in place, non-deliverable and deliverable options, cross-currency interest rate swaps, what has happened now is that this gives people a chance to plan. It will run through the banks. The banks are in the process of finalizing documentation with the central bank at the moment. There have been a lot of discussions and meetings around this, and that gives everybody the comfort that, look, there's an alternative. I can do my planning. I can you know, I can sit down in January or February and know exactly what my costs are going to be later in the year. So there's a lot of comfort around that, and that probably explains why the Naira has been a bit more stable to the dollar recently.
Obviously, and yeah, we do know that UBA's CEO has been quite active and also being part of the discussion about setting guidelines for a better system in that respect. Okay, going forward, Kubi, you've got elections coming up. The central bank governor has been quite vocal about inflationary threats to Nigeria not being a very productive economy. Fair value for the Naira into the second quarter possibly of 2011?
Sorry, Lerato, could you take that again?
I'm saying that, you know, you've got elections coming up. The governor's concerned about too much spending, concerned about inflation creeping into Nigeria. So moving into the near future, what do you think we're going to see by way of a Naira-dollar exchange rate? There might still be a little bit of devaluation. It will be controlled. It will stay controlled because of the measures that have been put in place, which I've explained. And then at the same time, oil prices have stayed high. And that's one of the key things. That's very key for our economy. Good oil prices means that we tend not to have we tend not to have a drawdown on reserves. In fact, if you look at 2010, we lost reserves for about 10 months during the year, and then because of strong oil prices, even with the demand, we were able to see a slight uptick, maybe like in the total reserves level, and we expect that strong earnings will continue to support our reserves, and that would diminish the impact on the Naira overall. We don't think it will slide too much into the second quarter. It should stay stable.